There's been disruption of the wrong kind, really, in the US recently. We've got the Federal Trade Commission, the Department of Justice, turning the spotlight on the FANG stocks. How much of an issue is that, do you think?
Well, it is a bit of an issue for them from a valuation point of view. We certainly saw their valuations being taken down by this. It's going to go on for years and years. AT&T and Microsoft, I think, took a dozen years. And in one case, nothing happened. And in the other case, we ended up with a bunch of baby bells. So anything goes.
Yeah, as I mentioned there, we did see a rebound in those FANG stocks on some more dovish tone from the Fed chair, Jay Powell. But is that really sustainable going forward?
Well, they rebounded, but if you looked at the rebound, it was somewhat tepid relative to other tech shares that are not facing this kind of a trial.
Yeah, of course, the trade war is casting a dark cloud over many things at the moment. We'll just deal with a few of those issues. I mean, obviously, one of them is Huawei. Do you see this disagreement over what is essentially going to be the global rollout of 5G? Are we going to end up in a sort of bipolar tech world?
I don't think so. I actually think that President Trump is using Huawei as one of his biggest bargaining chips. That company is extremely important to China's ambitions in technology. We saw that when we, U.S., banned ZTE, they came back to the table pretty quickly, and we ended up solving that one. And I think Huawei is so much more important that I think this is the last big bargaining chip, and President Trump's a negotiator. Art of the deal.
Well, President Xi Jinping, you could say, is a negotiator as well. I mean, it's not easy to tease out the message from his tour of the rare earths facilities. Disruption to the rare earths industry, how much disruption is that going to cause to the tech industry?
Yeah, as I said, I think that both countries actually want to solve this problem. And they're down to the last 5%, we think, of bargaining. And it's going to be a tough, drag-out fight, in a sense. I think President Trump is playing hardball with Huawei. And I don't think, at the end of the day, that rare earths are going to be, bargaining chips at all. I actually think that what they all want is lower tariffs across the board. That will be a massive tax cut for the global industry and help to accelerate growth for both countries.
In terms of rare earths, though, do you find it at all frustrating that there's a sense that we've seen this movie before? This came up about 10 years ago.
Yes.
The supply chain for rare earths was never diversified. Do you feel like an opportunity was missed there?
Yeah, I feel as though rare earths, yes, I do feel like there was an opportunity missed there. But we also saw back then that China responded to increasing prices rather dramatically. We ended up with oversupply. So I think that could happen again. Yes.
I just want to talk about one of your favourite stocks at the moment, which is Tesla, and it's quite refreshing to talk to a Tesla bull. There's not seems to be in scarcer supply, but we saw the Tesla joining that tech rally today, and we found something new about Tesla on Bloomberg yesterday, an exclusive story that found that it earns a lot of revenue from selling credits to other car makers to offset pollution. So $420 million last year they sold, 420. That's an interesting number, isn't it? Yeah. There it is again.
Yes,
but does that alter your valuation model for Tesla at all?
No, I think it offsets some of the cash concerns that people have. We have not been concerned about cash. In fact, this stock has faced, I don't know if you have the game in this country, but whack-a-mole at various fairs. Last year it was production. They couldn't get production going. Then it was, they got production going, demand. There was no demand. Demand is exploding around the world for Tesla's cars, especially as they cut prices, a very natural response. And now, of course, it's cash. We went through this with Amazon in the early 2000s. Amazon couldn't do anything right. Look at what Amazon turned into. These sorts of stocks, in my experience, when we have this high conviction, these sorts of stocks, after you get through the whack-a-mole game, tend to do very well over time. If, as we believe, Tesla becomes one of the largest electric vehicle manufacturers in the world and evolves into an autonomous taxi platform provider. So we'll go from a very low gross margin story to a very high gross margin story. And I think that's what a lot of people are missing. I think it's a victim of how research is changing. Autonomous taxi platforms are about the convergence of three major innovation platforms that are evolving at the same time. Robots, autonomous vehicles are robots. Energy storage, they will be electric. They're going to be cheaper than gas powered. And artificial intelligence, they will be powered by artificial intelligence. Auto analysts are not trained to understand those three innovation platforms. And I think that's where the big inefficiency in the stock price is. It is our highest conviction stock, and it is our highest weighted stock.
Just very quickly, you've made a very successful career out of picking successful companies for your ETFs. What are you looking at in terms of new disruptive companies that you'd like to choose now?
Yes, well, I think that the genomics sector is not well understood. We're moving from a time, really my entire investment career, where pharmaceuticals treated symptoms instead of curing diseases. We're moving now with DNA sequencing and an understanding of what genes are mutating and CRISPR gene editing. We're moving into a world where we're going to see cures for cancer and for pediatric blindness, which is one of the first CRISPR human trials in the United States. And I don't think the market's priced for that at all. In fact, I can give you an example. In the late 90s, if I had told you that three companies had the foundational patents to CRISPR gene editing, and that they were going to help cure diseases like blindness, like cancer, my guess is those foundational patents, royalty on everything, would have earned those companies a market cap in the $100 to $200 billion range. Again, the bubble. Today, those three companies, Editas, Intellia, and CRISPR Therapeutics, can't even reach $5 billion collectively. So hugely undervalued out there, hugely.